What's going on? Welcome back to Financial Journey. So today I want to talk to you on Lucid. Market's been open about 1 hour. I want to give you an overview of some of the current data points, what is really causing it to go higher today, and go over everything else that you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So Lucid is currently up 2.2%. It did have a nice spike to around $3.92. And looking at the volume, 12.6 million shares being traded, 43.6 is the average. So Lucid has successfully gained the attention of big money. And there's a couple things that's probably driving it higher today that I'm going to talk on. And all of this is happening when the market essentially is pulling back. So you can tell that Lucid, in essence, in comparison to, I guess, a lot of other growth stocks, is doing rather well. Even Tesla down 0.81, Rivian down 1.4%. So Lucid is doing phenomenal, and PPI did come out, and this is what's prompting the broader market sell-off, because both on a year-over-year and a month-over-month basis, it did come in a little bit higher than the forecast. So 2% versus 1.6 for the year over year, and 0.5 versus a 0.1. And so this is where now immediately you are having a lot of analysts saying, hey, you know what, the whole mentality of rates being cut sooner rather than later, well, guess what? That's out the window. So I'm going to play this video near the tail end because I feel like a lot of people would get a lot of utility out of this. And once again, that kind of might show what might be coming next. Aside from that, though, there was no actual news from Lucid whatsoever. There was a SEC document, or like an 8K document, submitted after hours yesterday. And this one did say two things. One of which was a shareholder meeting that was slated for June the 4th, 2024. That's their 2024 annual meeting. And they haven't actually given us their proposals, but similar to the previous shareholder meetings, nothing is really crazy. You're just voting on the accounting firm, directors, and compensation. That's for the most part it. And speaking on compensation, this did come out, part of that 8K. And this one kind of rubs me the wrong way. And oddly enough, I do see a lot of people kind of debating on this. I'm not really sure why, but about the gravity. So we do know right now, 𝗪𝗧𝗡𝗡𝗘𝗖𝗧, he got a $1 million bonus. That was announced, I think, 2 weeks ago, or within 2 weeks. And that was about the gravity, which even at that time, a lot of people said, hey, I work for an OEM. This is normal. This happens, right? I completely do agree with that. If someone does a good job, then yeah, they definitely do need to get paid for it. But with a company that's not profitable right now, that's burning through a ton of money, and where a lot of people kind of just laugh at Lucid because of that, I don't think they should be giving bonuses to a vehicle that hasn't even hit production, if that makes sense. Because what if things mess up? What if there's no demand? Then what? Are they going to go back and be like, hey, I want that $1 million from 𝗪𝗧𝗡𝗡𝗧? I don't think so. And similarly, it looks like they're doing a cash bonus payment to Peter Rawlinson in the sum of $6 million. So yes, I get it. Like, once again, maybe justified, maybe not. But I feel like with Peter already being, was it the top 5 most heavily paid CEOs, and Lucid burning through a ton of cash and missed on every metric, and like ever since their kind of start of production, I don't see this justified in my own opinion. But once again, despite this, though, the market does not seem to care whatsoever, and it is propelling it higher because it did gain the attention of big money. And you can tell that based on this. So these are some of the transactions that did occur so far above $100,000. So 3, so that's definitely a fairly good thing. So I feel like this, along with shorts returning some shares, I'm going to talk on that in a second, and also options. So there was a couple of things I have been bringing up associated to options. So right now, with Lucid being at $3.69, it is above this 350 mark. And I do feel that market makers, instead of covering on Monday, they're just hedging their bets. So they're already covering right now. Maybe they do anticipate higher highs come next week. Maybe that might be a positive thing. But as it stands, if Lucid stays where it is, they're going to have to cover 20,000 at that 3, and then 16,000 at the $3.50 strike price. So again, that spike up that happened this morning right here was a couple things. Shorts closing out some of the positions, as well as just market makers covering for those options. That's just my own opinion, of course, not a financial advisor by any means. Even looking at shorts, right now they are increasing about 325,000 shares. 29.9% of the free float is being shorted. 264.74 million shares overall are being shorted, and cost of borrow average slightly lower in comparison to yesterday, but 40.1. Looking right here, you can tell pre-market they did increase about, it looks like 1.1 or 1.2 million shares. And then as soon as the market did open, this is where you had that downtrend. So all of this right here is very much correlated with this. So them returning caused this, them increasing, as you can kind of see right after that sell-off, was this bounce right here, or kind of them causing all of this. So all in all, I do feel that higher highs is definitely coming for Lucid. Their technicals are still looking and pointing to $4 plus coming sooner rather than later. Just there's a lot of things that just rub me the wrong way, such as this. Even when it comes down to this, like even like was it a couple months in advance, I've been saying, you know what, this is one of the rare opportunities for retail to pose good questions to management. But I must admit, these questions that so far that we are posing, I do not like them at all. And especially because of this 8K, I don't know how on earth this is top 3 questions and has 1.2 thousand votes. Do you plan to take a salary cut to reduce losses or plan to buy back shares to improve stock health? Buyback is out of the window. That's just someone asking that they have no idea. Like, buyback is not logical. Lucid's not profitable. They are burning through a ton of cash. That's very irresponsible for them to do a buyback. That's just, especially for them to cover that, they'll just need to dilute. That just doesn't make sense. And this action right here about him getting $6 million, like that kind of rules out, are you going to take a salary cut? So this question, the fact that it is posed as number 3 is just completely illogical. And that's a bad thing about a very heavily retail presenced stock such as Lucid, because you do get a lot of dumb players such as this Baby Rock, which supposedly they blocked or muted me a while ago when I allegedly was waiting on my peer. And for those of you that have been watching constantly my videos since roughly about 2021, that's when I started to cover Lucid, I have never once said that I was going to get the peer, ever. I said that if the gravity comes out and if the conversions into Canadian are acceptable, then I'll consider it. But I never once said that I'd get the peer by any means. So that is complete BS. And Logan, he's just a fucking dumbass. So there's just a lot of people that don't know how stocks work. And this is why we are getting the questions that we are. It is very unfortunate. And plus, like I've said, they don't really allow Canadians or any non-American entity, I guess, to really pose questions. Because in order for you to pose a question, you need to have an American brokerage. So kind of defeats their purpose. So I see this as very, very flawed. Even question number 4, when do you think that you'll have your first profitable quarter? I can guarantee they will talk on this because they'll be able to just say, you know what, we can't foresee the future and we're trying our best to kind of fix the gap and many things. Like, this is not, like, I'm really disappointed in all honesty about these questions. I don't know, maybe if they're just making it easy for Peter because it's going to be the very first quarter that Peter doesn't have Sherry to really save him. But then again, whatever, it is what it is. Moving on though, like I said, shorts are returning some shares, most likely market makers are covering, and plus big money is buying Lucid. So it is getting a lot of good attention. As far as options, $561,000 in calls being purchased versus 326 in puts. So 54% of all the options being done so far are optimistic. So overall, that's kind of a good thing. And looking right here, so far of the call options that are being purchased, there's a consensus for it to be above $4. And that's more so mirroring the technicals, which again are looking very good for Lucid, despite the broader volatility and whatever else. Looking at puts though, it is anticipated for it to be below or sub $4. So the risk versus reward is definitely very much there. And with it right now at $3.69, it is trading between this R1 and this R2. So for the rest of the day, you want to watch for this 364 to really hold, vice versa, $3.77 for it to kind of break above for that point as well. And technically, if you think about it, it did kind of touch this R3, so $3.98 is going to be the very strong support, and most likely that'll be the next big thing before it does get to $4.50. And hopefully their earnings is right around the corner and we'll hit a home run. But just let me know your thoughts on all of that. But moving on though, looking right here, momentum shows number of retail investors are slightly getting out. Stochastic is at 72, so it is getting close to being considered overvalued overbought, like I've signaled. If it does get close to the $4 range, this is where you might see a consolidation. But despite it being somewhat overbought, you do see a nice deviation, slight one though. So black line above the red showing a bullish sentiment. So all in all, pretty exciting day nonetheless, despite this crappy 8K that did come out, but maybe that's just me. I always like to play devil's advocate. I hope you guys appreciate that. I never like to always just be bullish and bearish. Like, I do believe in Lucid. This is why I've actually held it and still continue to do videos on it. But I like to bring up the negatives because negatives sometimes signal something bigger, or it just might be nothing. So obviously you guys do your own due diligence. Like I said, I just want to quickly play this video because this might give a lot of good context on what might be coming next across the board. So stay tuned for that. Let me know your thoughts on all of this.
It's to talk markets as we get close to the opening bell. 𝗖𝗧𝗛𝗧, managing partner at DCLA and a CNBC contributor. So we got CPI now and PPI. We had retail sales kind of weak. I'm not ready to say stagflation necessarily like Rick, but it certainly has the feeling more than last week that might be something that we're looking at. So maybe a little bit of a slower economy, but persistent inflation, which is like the worst of both worlds.
I mean, if that is the case, yes. I mean, we're definitely in for higher for longer for interest rates. And I think on the economy side, it'll be interesting to see, because if things do slow down, what will be price takers, and will companies be able to keep on raising prices, and will wage increases still happen? So I think there's going to be a little bit of a lag effect on that as well. But in terms of, the stock market, I think it'll make things very interesting, because what you really want to do is say, look at, well, what are the alternatives for investors? So higher yields means interest rates are higher, we can buy more bonds. So there's an alternative. Secular growth stories are going to be really important. So I think that's where some of the capital is going to flow. So I do think there will be opportunities, especially if rates stay at this level for a while longer.
And also just wanted to interject. So there was one thing, data that did recently come out showing that there's about $6 trillion in money markets sitting on the sidelines waiting to enter into the equity market. So I think a lot of that big money was in fact waiting for good data to come out. So the last data that's been coming out, like they've been saying, isn't necessarily the best. So I think a lot of big money is still waiting on the sidelines. And once they do come in, they'll be looking for value plays such as Lucid. I have brought that up in the past, but once again.
Because for a while when we were, Fed was mission accomplished, victory lap, everything else, it was like, wow. Look at the GDP and look at the labor market every first Friday of every month. It's so good. And inflation's coming down. It looks like we have the best of both worlds. Inflation's coming down, the economy's staying strong. All we need is a week, and suddenly we're back to the flip side, which is, one is like Goldilocks, the other is stagflation. And it doesn't mean you need to change everything, but it feels a little bit different than it did when we were hitting all new highs, and we, that was a good place to be, a strong economy and falling inflation. Are we there still?
Yeah, well, that was soft landing, right? That was the exact scenario for soft landing. Now we're in either no landing or hard landing, and the market needs to factor that in. So I do think, again, we need to wait for more data if things are slowing down. It doesn't mean they're coming to a halt, Joe. It just means that, hey, the growth that we had that had so much juice into it because of what we had done with interest rates before is now catching up. So I do think, and look, the Fed has the lever. So if inflation at some point comes down and demand stops increasing, and that was the whole idea, right? We wanted supply up, which is what's happened. And if demand slows down, you could see that inflation. But 2% is going to be a tough number, Joe. I think that's given what's happened during COVID.
So yeah, there you have it. Ultimately, higher for longer is the mentality. So what does that mean for Lucid? So technically a lot of growth stocks is very much linked to the interest rates, right? So higher interest rates is kind of inverse to their growth. So Lucid definitely will be stagnant somewhat until the Feds do cut their rates. So again, if it is kind of later part of second half, then you won't see that exponential growth that a lot of people are really anticipating to potentially maybe 6, 7, 8 higher. I don't know, all dependent clearly and the gravity, but a lot of that is going to be kind of diminished and held back until the Feds cut their rates. But that's just my own opinion. Let me know your thoughts. Don't forget to hit that thumbs up. But one final thing I just wanted to share with you, take advantage of this promo. Simply sign up for an account with Moomoo, throw $100 at it. You get 5 free stocks. Each stock is valued up to $2,000. So take advantage of this. Link in the description below and also comments. With all that said, appreciate all of you watching.